Hello everyone, welcome back to CryptoCache. Thank you so much for joining me here. Hope you're having a fantastic day. Happy Monday to you, if there is such a thing. We're taking a look at Bitcoin, of course, helping understand best practice and big picture, and we'll go ahead and take a look at a handful of things here today. But if you're new to this channel, just know I'm not a financial advisor. I love teaching people to trade. Hope you can learn something here today. My goal is to effectively help you become a better trader. So if you want that for yourself, CryptoCache.tech is a website. Link in the description below. Really just helps you understand best practice, which is extremely important in a bearish market or even a market now that we're in where we're kind of going sideways and or no longer retracing significantly. All right, well, again, we'll look at that and much more, but I do have a Trading Academy community and signal group, so if you're interested, CryptoCache.tech is a site, link in the description below. We've taken some decent profits too recently. We had a nice short position for Ethereum, nice little 40% on the day, and position is still open. I think there's a chance we might still hit our other targets. And that's again based on the fact that Bitcoin here does look like it wants to progress lower. Let's go ahead and take a look at that. So here is kind of where we're at. First of all, let's look at some other things here. Dollar index is down, so hypothetically Bitcoin should be coming up, right? And again, there's no guarantees on that, but with this one coming down here to the 50-day set moving average, could see a bounce, and the dollar index coming back up, and in turn, of course, Bitcoin continuing its progression lower. There's possibility that, again, no guarantees on this, of course, because dollar index can kind of be like it's kind of random when it connects itself, but a lot of times when you see a sell-off from the dollar index, you can see an increase from Bitcoin. And Bitcoin did bounce a little bit this morning when the market opened. So just kind of give you perspective there. S&P and NASDAQ are both kind of, they didn't necessarily gap up, but they certainly increased in value. So, it's a good day for traditional markets, you could say, for 0.5% roughly, which does correlate somewhat to Bitcoin. Even though we have a doji candle here today, it's still increased since that market had opened, right? So again, just some things to kind of factor in. Not super relevant at this point, but what is relevant, of course, is some of the key levels here. Now, first of all, why don't we go ahead and take quick perspective here on the monthly. Once again, we closed over the 50-day set moving average. Very positive there in that sense. We finally got a candlestick closure above that. The weekly also closed above the 200-day set moving average. So hypothetically, the 200-day set moving average, right around 23,000, could and should continue to work as a support level. Again, could and should is a key takeaway here because it's no guarantees, but in the general sense here, we're above some key level resistances, which are going to likely work as support levels now, okay? So again, that's a positive thing. Even if we were to come back down to say to 21,600, which is one of our key level supports, and get a bounce there, that'd be perfectly fine as well. So we're not in dire straits by any stretch if Bitcoin decides it wants to continue to retrace a little bit further. In fact, I'd almost welcome it because I like to see my average price come down based on the fact that I like to dollar cost average simply $20 a day into Bitcoin and Ethereum. Something to think about. Doing something very similar is ideal. Dollar cost average is very important in this market, just based on the fact that people make a lot more money when they invest when the market's down versus when they invest when the market is up. That's why fear of missing out is a terrible thing, and you want to just kind of get in when you feel right. But again, I know it's difficult, easier said than done to invest in a down market because you don't have any money left. Hypothetically, you've lost a lot of it. I get that. But if you can somehow afford to put a little bit of money into Bitcoin for now, hypothetically it hits 70, 100,000, which is very realistic in the next couple of years, then you're going to maybe 2 to 4 to 5x your return on investment, and it'd be worthwhile to do that. That's more of a certainty than it is investing in altcoins and hoping they pump. Right? So again, different schools of thought, but that's just something to think about. So here's what the RSI, first of all, 50 to 70. We see this here, same range that we've been in for a little while. So there's nothing definitive here telling us that we're going to see a continuation downward or upwards. It's kind of just this fair to midland state, which is normal. We also do not have a divergence here specifically on the MACD. It's taken a little while, it's taken its time, which is fine because honestly, even if the price were to come back down again to 21,600, get a bounce, that's hypothetically what we want to see, then we'd be in a good shape here even still, where the MACD would still be converging on the daily. Okay, so that's positive there. I want to guess we have a divergence on the 4-hour, just based on the simple fact, yeah, there we go, still present, of course. In fact, it got a little more aggressive here, so to speak. So in general, that's really telling us that the bears are in play, and there's no reason to take a long position at this point. I'm willing to speculate that the Ichimoku cloud will also tell us something very similar, and it's just something to be mindful of. So again, on the 4-hour here, we can kind of see that the price action is working itself above the 50-day set moving average, as well as below the 200. Remember I mentioned that yesterday, the 200-day set moving average was working as resistance. Well, that held true and continued to progress lower. and we'll likely probably see a retest of the 50-day simple moving average on the 4-hour. Again, super relevant, not exactly, because the moving averages I think are the most impactful on the daily. So we want to focus on that more so, but that does kind of tell us in this transitionary time frame that we are within a couple of ranges, and that we shouldn't expect a significant drop, but we should also anticipate the price action to not come up, if that makes any sense. Again, most signs that we see right now are tentatively bearish, and what I mean by that, of course, is, well, MACD diverging, we're under 50 on the RSI, we're stuck under 50 tentatively. Now, I'm saying stuck under isn't really a great way to describe it, because we're not stuck. It's just that the price action has come up once already, and this is the second time where it does look like it's rejected out off that resistance. Coincidentally, that resistance on the RSI is running concurrent with 22,450, or sorry, 23,450. You could even say 23,500. It's basically a key level Fibonacci retracement, and the price action is getting stuck underneath that. In fact, if we look at the 1 hour, you can see here, the price is having difficulty crossing this plane. Okay? So it comes up, gets rejected. The likelihood of lower lows and lower highs continuing is greater at this point. Okay? And again, we overextended ourselves here, right around the 25,000 range. So I tried to cut up there, got rejected, and it's still continuing to make lower lows. All right? And we're making lower highs as well. So again, what you want to do is you want to go with the grain, right? The grain right now is telling us the price action wants to come down. It is not saying that you want to take a long position because you're trying to buy the dip. Again, those who buy the dip are typically very unsuccessful because you don't know when the bottom is in. You cannot truly find the bottom in trading. It's just almost an impossible science. You might get lucky once in a while, but I can assure you, you're better off picking a side and sticking to it because we're not the ones in control, right? The bears, the bulls, whomever is controlling the market right now, we need to identify what direction they want the price to go and get in with them. That's effectively what we're doing. So let's take a look at the cloud and kind of see, because yesterday we were right here. We were trying to break above the cloud and we couldn't. Okay, and I mentioned that the conversion line below the baseline, even though the lagging span was not free and clear of price action per se, it was still giving us most indications that a short position would be viable, which is why we held our Ethereum position open and hit our 41% mark this morning, based on the simple fact that we're getting rejected by the cloud here on the Bitcoin Ichimoku cloud 1 hour time frame. Okay, so again, the 1 hour Ichimoku cloud carries a lot of weight. It's a very, very good indicator, kind of letting us know right now that if you have a short position open, you probably want to keep it open as well, because the conversion line is well below the baseline. We're obviously below the cloud, both leads, and we got a nice little lagging span free and clear of the price action. So again, a good handful of reasons why a position right now is viable. In other words, a short position is viable. It's also an indication that we're below the cloud. We have a lot of resistances above us. So a long position would not be the most ideal or appropriate for Bitcoin right now. Now, granted, there might be some altcoins surging here a little bit, of course, because the market had opened green. But once again, that's not something to kind of go off of. With Bitcoin having a general consensus of being on its way down, we can kind of expect and anticipate it to continue to happen. Okay, until we break this lower high, lower low pattern, it's going to continue to come to full fruition. And to me, I think that we are likely to see a retest of 22,500 and or this range here, this golden pocket, so to speak, of 21.6 up to upwards of 21,800. So this little area here is common retracement area for Bitcoin and just in general for Fibonacci retracement levels. And the reason why I would like to see 21,600 or 21,800 retests is because that would continue our higher low pattern, and it would also give us a much better entry point to average our positions down lower. Okay, because again, years from now, we're going to wish we'd got in at 21 or even 23,000. Either way, just again, some foresight there, hopefully kind of give you some perspective. But at this point, we are definitely in a descending type of trend. We got to respect that and kind of just wait to see what happens, for lack of better terms. I mean, that's commonly what it is. So again, be patient. If you're a community member, I hope you got in on the Ethereum trade. That was definitely a good one. You got a nice fill at 1750, I think it was. And good positioning there in that sense. So keep that position open. The likelihood of it continuing lower is higher. I think we will hit multiple profit targets. But more importantly, when it comes to Bitcoin, just be patient. I'm going to consider sending out a short signal here soon for Bitcoin, but I think it's a little premature as well, because I don't like to jump in when the price action is almost to its destination, right? And I think we're at least halfway there. So again, just some thought processes there, but generally speaking, Bitcoin is not in terrible shape. This retracement is normal. It's very standard, and I would say that it's very healthy in a lot of ways. So you need to see the price action come down before it comes up. It's just a matter of how low it will go. Will it hit 22,500, or is it going to come as low as 21.8 as a rough estimate there? I feel like 22.5 is more of a likelihood, but at this point, we'll definitely see here soon what happens next. So that is kind of where we're at here for Bitcoin. Hopefully it made sense and I was clear and concise. If you have any comments, obviously feel free to do so. And I love to hear from you. And if you would like to become a better trader, again, CryptoCache.tech is the site. Link in the description below. We have a lot of new members coming over frequently now because of the fact that, that this is that kind of market that's we're in this transition right now. And once we transition into a bullish type of market, it's going to be fantastic, a lot more fun. But you may as well learn as much as you possibly can in a bearish market. That's the best time to learn. Because if you can survive this bear market, which is really, in all reality, quite easy based on position sizing and how you structure your trades, you'll be a lot more successful for the bull markets when things are just going crazy and you're hitting every single signal possible. It's a really fun time. Right now, we got to be a little more meticulous and effectively, just pick our battles, so to speak, but it's all well and good. All right, either way, thank you so much for joining me. Hope you have a great rest of your day. We'll see you next one. Take care.